Hello everyone, welcome back to the channel. Today we are diving into one of the most popular and trusted investment options that are available in the market, that is called mutual funds. If you are if you have ever heard mutual funds and wondered what exactly they are, how they work, or whether you should invest, this video is your one-step guide. So hit that like button and click on subscribe. So I will start my video. What is a mutual fund? Let's start with the basics. Mutual funds is a type of investment where many people pool their money together, and the money is managed by a professional called a fund manager. The fund manager takes this money and invests in a mix of assets like stocks, bond, gold, or even real estate. So instead of buying individual stock yourself, you invest in a mutual fund, and the fund buys different investments for you. It's like ordering like example, it's like ordering a thali at a restaurant. Instead of choosing a beverage separately, it's you will get a well balanced plate that's already prepared by experts. uh, Now another question you will ask is, how do mutual funds work? Let's break it down. When you invest in a mutual fund, you're basically buying units of that fund. Let's say a fund has 1 crore, and there are 1 lakh units. That means each unit costs rupees 100. As the value of the fund investments goes up and down, the price per unit called NAV, net asset value, also goes up or down. There are different types of mutual funds based on what they invest in. Uh, Equity funds invest mainly in stocks, high risk, high return. That gives debt funds. There are the funds that invest in bonds and government securities. It has a lower risk. Hybrid funds mix of both equity and debt. Balanced risk. Index funds track a specific index like Nifty 50 low cost, or ELSS funds. Tax saving equity funds with a 3 year lock in. So based on your risk level and goal, you can choose the right time. Uh, why do people invest in mutual funds? Good questions. Why are mutual funds so popular? Here are some powerful reasons why mutual funds is so popular. It's help diversification. Your money spread across many stocks or assets, avoiding risk or reducing risk. Professional management. Experts handle your money. Liquidity. You can easily withdraw your money easily. Low entry point. Start investing as little as 500 per month. SIP option, systematic investment plan. Let you invest monthly just like EMI. Regulated by SEBI, safer than many steady schemes. In short, mutual funds give you smart and safe way to grow your money over time. There are how now you will ask a question. Uh, do I do SIP or lump sum? Th- There are mainly two ways to invest in mutual funds: SIP or lump sum. As in SIP, you invest a fixed amount every month, say every month, or lump sum you invest a large amount at once. CIP is great for beginners and salaried people. You build the habit of saving and benefit from the quick cost averaging. Lump sum is useful when you have a large amount ready to invest, maybe from a bonus or gift. Both are good, it just depend on your situation. What are the risks of investing in mutual funds? Let's be honest. Mutual funds are not risk free, especially equity funds. They can go up and down with the stock market. You might be see short term losses, but if you stay invested for 5 or 10 years historically, you will see strong returns. Also, you must check the expense ratio. That's the small fee that funds take every year. Lower is better. And always read the fund objective and past performance. Must remember, past performance is not a guarantee for future results. How to choose a good mutual fund is in this surviving market. These are few beginner tips that I can give you. Define your goal, retirement, education, wealth building. Know your risk appetite, low, medium, or a high. Check fund history. Look for 5 years plus stable performance. Compare expense ratios. More if it is lower then more return for you. Use trusted platforms like Pro, Zerodha. If you are unsure, start with index funds or balanced funds. They are beginner friendly and have low cost. What are the now you will ask what are the taxes that levied on mutual fund? Mutual funds can be taxed. Here is how it works. Short term, if you have mutual funds less than 1 year, then if you have gain, then 15% of tax. If you are long term more than 1 year, then 10% of tax on above 1 lakh. Uh, or deferred taxed as your income slab. ELSS funds give tax benefits under Section 18 ATC up to 1.5 lakh. So plan your investments not just for returns but for tax efficiency too. Should you start investing in mutual funds? If you want to grow your money over time, beat inflation and build wealth, then yes, mutual funds are one of the best ways to start. But don't invest blindly. Take a time to understand your goals and always invest for long term. Uh, that's it for today's video. If that if this helped you, drop a like, subscribe for your uh, for more for more content of this type, and comment below which type of mutual fund are you more interested. Thank you for watching, and always keep learning and keep growing. Thank you.